sort of leverage they can take in this session, as well as what the opportunities for fundraising, business acceleration, and business support this entire panel can provide for you. Great. So with that, I'd also like to, briefly mention about the industries that we're primarily helping or will be able to assist with. So we have companies across deep tech, across fintech, med tech, as well as a lot of companies working in and around AI. We have seen, the macroeconomic factors for these industries in the US is huge, and companies across these sectors we believe have the largest potential. Of course, that doesn't go on to say that the other industries are not suitable for this, but yeah, absolutely great. Uh, and to all the companies that are here, we are here to assist you with the fundraising, with the business acceleration, as well as with the on-ground support that is required for your entire A to Z, the international expansion process. And we believe that as a Swiss Army knife for international expansions, D Globalist has been key in their assistance to companies who have been going out. And with that, I'd like to quickly introduce you to the man behind the idea for D Globalist, Divesh Sharma, our CEO, who has had multiple years of experience in international expansions and global regulatory, coming from a purely consulting background and starting off in his own practice in 2017, assisting everyone that comes to him with the largest of mindsets and helping them expand their boundaries. Divesh, over to you. Yeah.
Thank you, Bhavya. And my apologies for making everyone awake early on the Bayside and also not letting people go to home. And I completely take full onus of it, full responsibility. Surely the guy behind the Globalists, and wouldn't have been possible without Bhavya and other team members. So I'm going to talk about what D Globalist is, while Bhavya has covered it briefly. So we are an expansion ecosystem. We help companies in cross-border expansion without any limitation, whether it's from India to US or US to other parts of the world. To keep it simple, we do it through amazing people like people are on the panel. Similarly, we have access to other markets, including European market, Middle Eastern market as well. So what has changed recently is the ability of a company to speak to the potential buyer has increased, which has increased the TAM for majority of the tech companies. Now they can access the markets easily. They can talk to their potential clients sitting remotely, thousands of miles away. This has further led to a lot of other opportunities. Now it is the geo-mobility or the geo-freedom which exists now in the tech world. Even a small company can compete with some of the largest companies on this planet. And yeah, that's the reason we exist. D Globalist is here to help these companies in expanding their boundaries, testing the new market, and taking the new challenges. I could recall that Freshwork was one of the biggest examples, which launched directly in US. They had to launch in India, but because of the lack of regulatory guidelines providing them with a recurring payment system, they had to launch in US, which came out as a blessing in disguise for them, and everyone knows Freshworks now. So similarly, the reason of expansion could be a better market fit, could be regulatory guidelines, promoting your business, allowing your business in the target market. So what we say is, when you have a tech company, why to limit yourself? And that is also true for a lot of manufacturing companies as well, which we are seeing from the Indian side. They are exporting to the world. Now they are looking beyond borders. They are looking to set up their own base by creating a permanent establishment. So I'd like to keep it brief. I think the panelists with me are far more knowledgeable than I am. And let everyone take the advantage of their insights. So thank you once again for joining with us and wishing you all the best.
Thanks, Divesh. That's insightful. Right. Next up, we have the MD for late-stage startups and unicorns at Microsoft, Garg. Ms. Shaloo Garg hosts a vast experience in the US market, and has been key to D Globalist success in the past couple of years. Also being a member at also being an advisory member at D Globalist, we seek a lot of advice back and forth from Ms. Shaloo, and I, for one, am surprised at the amount of knowledge that that comes our way, and the amount of knowledge that we gain from. Uh, right, absolutely. So, Shaloo will be speaking about the key considerations for expanding to the US market. And over to you, Shaloo. Please enlighten us.
Great. Thank you, Bhavya. Can you hear me okay? Awesome. Hey, everyone. Good evening, good morning, wherever you are. Really excited to be here. My name is Shaloo Garg, and I'm based in San Francisco Bay Area. India is, of course, near and dear to my heart because I was born there. So every time the team D Globalist calls me, I drop everything and I'm like, absolutely, I'm here to help. Today, we're going to talk about one of the most exciting topics, which is very near and dear to my heart. Before we go there, just a little bit about myself. As Bhavya mentioned, I'm with Microsoft. I lead the pre-IPO and the IPO business, which is roughly a $2 billion run rate business right now. We actually started building it 3 years ago. Deep experience in investments, in leading the startup ecosystem across the world, and also corporate ventures. So with that, everywhere there's this two-letter word that's everybody's talking about, including my kids who are in school, which is AI. And as you get deeper and deeper into this world of AI, we actually are realizing that the dynamics are changing right from the investment thesis all the way up to go-to-market. Everything is shifting, and actually quite a bit has shifted in the last couple of years or so since our announcement with OpenAI, and of course, the market is picking pace on it. So with that said, how do you kind of bifurcate noise from reality? I have taken quite a few companies IPO, and what I'm sharing with you here today is purely, traits of successful companies in the world of AI. Oftentimes, when a product is born, the founder who's extremely passionate about the product because, it's their baby and it's the most beautiful looking baby in the world, kind of builds the product and then says, okay, let's go fundraising. And over again, I've found that fundraising is actually not where the buck stops. It's actually where the buck starts. But before you get there, there are so many aspects of the business that you need to be aware of if you're thinking cross-border. And in the world of AI, everything is cross-border. I mean, being global is kind of table stakes. So with that, let's get right to it. I believe I have about 10 minutes. Can you guys see the slide? Okay, it's progressing. The first thing I would say is think globally and act globally. So, oftentimes there's actually a very popular book, which is The World is Flat, which came out about a decade ago, which really emphasized on thinking globally, but acting locally. So in a way that when you're building your product, you're kind of thinking globally, but in terms of your TAM, you got to kind of start building in your local market for a variety of reasons. It could be financial, it could be your customers sitting right next door, you're good friends with investor, what have you. But in today's world, some of the most successful companies that I've seen build, especially in seed stage, Series A, is these companies, right from the get-go, actually think globally and act globally. And what does that really mean? What that means is, as you're building your product, you're not limiting your TAM to a local market. It's human nature, right? Whatever is, you're risk averse. So as you're building your product, you're like, yeah, next door is much more easier. Let me get a quick win first before I kind of transcend across borders. But the tide is shifting. I'll give you an example of a South African startup. They are actually building solution in AI, using AI for educating young girls in their local community. And they are actually seeing that there are limited availability of schools for these young girls. So they've decided to leverage AI, which is a beautiful concept. But as they're building the product, they realize that the model that they're building can be leveraged in developed countries like US. Now, we talk about AI all the time here, but the model is so awesome that as they were building the product, they realized that US can also, develop markets like US can also leverage it. I'm actually one of their mentors. So as you're building the product, it's super critical to look at the PMF, which is the product market fit, in terms of what other aspects of the world can you, or what other facets of the world can you tap into. The second thing that I'm extremely passionate about is partnering with incumbents and hyperscalers. I work with so many companies on a daily basis, almost to insanity, how they look to incumbents and hyperscalers like the Microsoft, the Google, the Amazon, the NVIDIAs of the world, saying, oh my God, like, you're big companies, can we get some free credits for our infrastructure? And this is one of the biggest missed opportunities that I see, especially in young companies. If you're coming to a hyperscaler like a Microsoft or a Google or Amazon or NVIDIA, talk to them about how they can help you grow, how they can invest in you, how they can get you access to customers. And it's not only just about credits. Yes, all these companies have great programs that kind of give you credits to build on cloud infrastructure. They will give you mentors, but kind of push the envelope. I love, there's actually a company, it's started by two IITians, it's Observe.ai. And I invested in them back in Series A. I believe now they're in Series C. But I love the fact that, and this was like a couple of years ago, that they came to Microsoft and they said, yes, you guys are giving credits, but what else can you give to us, right? Can you take us to a fintech service market or perhaps a manufacturing market and help us get connections there? So it's very critical to kind of think through and just believe that it's not only you, your team, your investors, or your potential investors who are going to help you accelerate your journey. You can actually request for help or ask for help from these companies. And all of these companies have had amazing success stories, will step it up if you kind of push the envelope there. Last but not the least is access to enterprise customers. Oh my God, like, this is, everybody wants customers, right? Everybody, because that's money coming in. Why would you lose that opportunity? But there's method to madness when it comes to enterprise customers. Let's say if you go to a big hyperscaler and you say, I'm going to use Microsoft as an example. We are almost in every enterprise sector, right? So many companies come to us and say, Microsoft, you guys are like in Fortune 500 or Fortune 50 companies in one way or the other, whether it's the hardware product or the software products. Can you get us access to enterprise customers? That is probably the most incorrect way to ask access to customers. The best way, and some of the most successful companies that I have seen accelerate, is by actually sharpening your pencil around what exactly are you looking for. So it's almost like when I talk to these companies, I tell them, I said, why don't you coach me? Tell me, who is your customer? Build a profile of your customer. And building a profile does not necessarily mean I'm selling my product to a CFO or a CTO. It's down to what vertical, what sub-vertical. What happens if you're not successful in plan A? What's your plan B? What's your plan C? So in other words, let's say fintech is your core market and you're selling to the CFO and the CTO. Well, within fintech, are you going for capital markets? Are you going for investment? Like, there are so many, there are like 21 tiers in fintech service market. What if fintech fails? What if fintech is not, the buyers say you guys are not a good fit? What's your plan B? What's your plan C? So it's super critical to understand the dynamics, especially when you're early stage. As you grow, you kind of learn through your mistakes and you get smarter and smarter in how to access customers. But in that series to almost like Series B, I would say, that's the most sensitive phase of latching on to customers. And that actually builds your story for future sales as well. So it's super critical, to kind of build that story as to how you become indispensable for an enterprise customer. It's not just about you asking that, hey, can you be my customer? It's almost like storytelling that, hey, here's how I can help you accelerate in your business. So with that, I know I'm almost on time here, and my apologies, I ran a couple of minutes over. But I'm here if you have any questions. I wanted to plant this in your mind as you're building your companies. Please do not just rush for funding. There's so much goodness that you need to kind of think through before you get to that stage. So with that, I'm going to stop sharing, and I believe I'm handing it over to Emily. Am I right?
Right. Yes, that's
Yeah.
correct. Thanks, Shaloo. That was really helpful for the people here. Great. So next up, we have Emily Pollock, who has had experience across finance as well as retail, and is currently the MD of retail at Republic. So, Emily, it's a great pleasure for us to have you, and the floor is all yours.
Thank you so much. Really pleasure to be here. As you just mentioned, I'm Emily Pollock, lead our Republic's U.S. Marketplace and Retail Division. Going to speak briefly about the power of private investing and alternative fundraising methods for founders, focused specifically on crowdfunding in the U.S. and globally, and fundraising from your community. So a little bit about myself. I am based in New York City, been at Republic for 3 years, and have been focused on scaling our retail business. So I'm going to spend a little time sharing what Republic is very briefly, discuss the benefits of community fundraising, and then dive into the different fundraising methods available at Republic and what makes for a good company to crowdfund or go that route. Republic is a global financial services company that provides access to investors across the globe to diverse investment opportunities and helps companies fundraise at many different stages of their journey. We've been backed by Valor Equity Partners, Morgan Stanley, AngelList, many other leading institutions, and we have quite a large portfolio now of over 2,500 companies that we've successfully helped fundraise. We've had a community of over 3 million members in around 100 plus countries. And to date, we've deployed more than $2 billion through our global investment platforms, funds, firms, and within the Republic family. We also have established operations in the US, but also in the UK, the EU, the UAE, South Korea, and Singapore. So Republic seeks to provide opportunities for founders at any stage of their fundraising journey and to leverage their wider global communities. We also have an institutional arm at Republic that helps companies fundraise in more traditional ways, and we have a digital merchant bank and Web3 advisory team. Through our global marketplace, as you can see here, Republic is the leading platform for $5 million crowdfunding raises, which is the maximum you can raise in the US under Regulation CF. And then we also helped many companies raise much larger rounds, including Robot Cash, which raised over 29 million, and Chingari, which you might be familiar with, an app similar to TikTok in India with many millions of users. We've helped many companies fundraise in non-traditional ways and can help you navigate that landscape. So from tech to Web3 projects, AI, we've done utility token offerings, food and beverage companies. We've recently gotten into the entertainment space with film, helping sports teams with ownership, opening up ownership to the average retail investor, SaaS and more. We've helped across the board companies raise with Republic and from their communities. Since inception, we've had the opportunity to fund and service many companies across all sorts of industries. And I'd note, those include SpaceX, Revolut, Bobby. We've also invested alongside many well-known institutions and VCs. So what are the benefits of doing so, and what are the benefits of crowdfunding? Republic gives you the opportunity to break into a global audience and transform your purchasers, your supporters, your customers, old and new, into loyal investors and customers. If someone invests in what you're doing today, they might be more likely to buy your product off a grocery store or supermarket shelf tomorrow. They might be also more likely to introduce you to a wide network that you previously wouldn't have had access to. We find that founders that provide true ownership to what they're building to their community and scale that community on a global scale build an army of ambassadors and loyal customers. So we have some research to back this up. Just sharing some stats, we find that owners and shareholders are twice as more likely to refer a new customer than someone who's a non-owner or non-shareholder. We also see that shareholders or owners of a company impact customer lifetime value and spend more than a non-shareholder. And in fact, there's about a 40% increase in the weekly spend with brands that offer ownership or stock rewards with purchase versus not. So if you look on the right-hand side, that circle chart, in a study that compared weekly brand spend by individual investors who own a stock grant versus not, the investor spend was just so much greater, as you can see there. So investing in ownership can definitely create a strong emotional attachment from a consumer to that company, project, or brand. And as you're hearing about this, community capital, as you're thinking about your fundraising journey, is not necessarily an alternative to VC capital or to institutional capital, but it's a complement to other forms of fundraising. And many of the companies that go on to raise with Republic do so while also raising money elsewhere or looking at their fundraising journey. Diving into a few examples, companies that raise with Republic are able to raise capital, but more than that, leverage their community to turn them into engaged, loyal fans, customers that ultimately drive revenue. So Gumroad is one example of this. They were a company that raised $5 million in less than a day from over 7,000 individuals and found that those that invested in their campaign then went on to have increased engagement on their product by 3 times. Bobby's another example. It's an infant formula in the US. They've been growing exponentially, and a lot of that growth is due to their word of mouth and leveraging their community and providing incentives through affiliate programs and word of mouth to scale that more impactfully. At Republic, we've also helped many on the Web3 side. Siri is one example of a Web3 project that launched a token offering and activated their community through social media, through AMAs, and more to raise over 21 million. So there's a lot of benefits to community fundraising, but how do you know if it's right for your company? And can Republic help you fundraise? And so at Republic, we have a robust investment infrastructure, a very complex legal framework that we've built to allow us to facilitate raises all across the world. And we have a team of compliance champions that can help you navigate this and figure out if it's right for you. We have multiple solutions depending on where you're located, where you're doing business, where you're operating. So in the US, as you might know, we're heavily regulated under the SEC and FINRA. And much like anywhere in the world, the US has government and non-government agencies that regulate and enforce different securities laws and rules that we must follow. And we help companies comply by setting you up with compliance champions and also our network of third-party legal attorneys and accountants and financial reviewers that help you do everything in a compliant way. On the US marketplace at Republic, we have multiple entities that allow you to raise funds in different ways. And so we have our portal, which allows you to raise a traditional Regulation CF offering. As I mentioned earlier, that allows you to raise about $5 million from non-accredited, accredited, anyone across the globe. We also have a broker-dealer that allows you to raise through Reg S, Reg D, and Reg A. Now, each of these exemptions have different rules that allow you to raise different amounts of capital, but also it depends on, again, where you're located, what you're able to do. If you're US incorporated, we can help you crowdfund under Regulation CF and raise up to 5 million. If you're in the UK or EU, we also acquired a platform called Seeders.com that can help you through that and raise up to 8 million pounds from the crowd. We also have a broker-dealer that if you're not US incorporated, you can work with Republic's broker-dealer to potentially raise via Reg D, which allows you to tap into the accredited or more high net worth US audience, and Reg S, which allows you to tap into international investors across the globe, whether they're accredited or not accredited investors of any type. So for the US, as long as you're US incorporated, you can raise via CF as long as there is some IP or there is some activity in that US entity. So lots of nuances, and I'm available after this, obviously, to chat and answer questions, but wanna make sure that you know that this is available to you. You can raise through Republic using various security instruments, including straight equity. Most commonly used is our SAFE, which is simple agreement for future equity. But also we help companies through revenue share agreements, debt, and other types of security instruments through their fundraising journey. everything we do, we take compliance very seriously. So we want to ensure that you're set up for success and future success for your company. Let's dive into a little bit about the due diligence process. I'll speed through this, but what we look for when evaluating an opportunity to list on the Republic platform. The diligence team at Republic evaluates each investment opportunity in business and presents the opportunity to our respective investment committees. Goal is to mitigate business risk, legal risk, and understand the company and business to determine whether or not it's a good fit based on some of the things you see here within legal diligence and the commercials of the company. Here's an example list of what might be requested to evaluate your company. Very similar to what you might provide a VC. It's a standard due diligence questionnaire, financials, visibility into the company. And for us, it's evaluating and making sure that you are a legitimate company. You check the boxes of not being fraudulent, and meeting the criteria for the various entities hosting the deal. I'll speed through these, but if you're a good fit, our aim is to make fundraising process as simple as possible for you. And we'll set you up for success by helping you with our marketing, your branding, and also promote your company to our broader community through our social media channels, through our newsletters, through our email channels. And also, we have the ability through our global platform, Seedrs.com or Public.com, to really elevate and share your company to a wider audience. So we provide robust resources on what it takes to have a successful fundraise, how to truly tap into your community. And overall, this is what a campaign might look like. So you go through a kickoff call with a campaign manager or account manager. They will help you onboard, go through financial reviews, go through legal process and marketing. And once you launch that public campaign, we provide marketing support. And finally, when you close, we are there as champions to help you through that journey to tap into that network you've now built, and activate that community of owners. So that's it. I'm excited to learn more about many of the companies listening in, meet you all. If you're interested in exploring community fundraising alongside your traditional raise or even separate from and want to chat more, my email is here, so jot that down. More than happy to help connect you to various members of our team. So please don't hesitate to reach out. And of course, I'll be happy to answer questions later.
Excellent. Thanks, Emily. Crowdfunding has recently picked up in India as well, and it's absolutely wonderful to hear what is doing for the founders there. Excellent. Great. So next up, we have an ex-founder. Joe Ross is with us. He's the partner and the manager in the US office for Entrepreneur First, and will be speaking to us about clean tech and agri-tech in US, the opportunities around the same, as well as what the current trends are in the space. So Joe, over to you.
Amazing. Good morning, everyone. I also just have a few slides that I'll just really quickly try and share. 1 second. Oh. Zoom does not seem to be liking me right now. 1 second. All right. There we go. Hopefully everyone can see my screen. So thank you, everybody. Really exciting to be here today. Just to give you some background on myself, my name's Joe. I'm the partner and general manager for Entrepreneur First here in the US. I started my career and started my journey, at least as an investor, actually being based in Singapore and spending a lot of my time building companies and investing in companies in India. I used to travel to Bangalore once a month. And now I spend all of my time both building companies in the US, but also helping founders access the US market, both for customers and for investment purposes. So one of my key activities I spend a lot of my time on is helping founders from all different markets around the world raise funding here, build their companies here, establish a presence here. So really excited about everything that everyone is talking about today and some of the interesting opportunities that might come out of this. Just to give everyone some background on Entrepreneur First before I jump into clean tech and the agri-tech part of our portfolio. Entrepreneur First invests in founders incredibly early. You can think of us as probably the earliest stage investor you could imagine. We go out looking generally not for companies at the earliest stage. We go out looking for individuals. We go out looking for individuals who we think could start companies that will become generational businesses. And we do that on the basis of just the talent that we meet. We do it on the basis of who those people are, what they have the potential to do, and the journey that they could go on with us. We make an investment into them as an individual. We help them find the right co-founders to work with on that journey, and then help them scale, build out their business, potentially relocate or access the US market alongside that journey. We do this model. We've been doing it for about 10 years now. We do it on behalf of some of the world's most exciting founders and investors. Reid Hoffman sits on our board, works really closely with us. We've been an early investor and backer in AI companies, and Demis Hassabis, co-founder of DeepMind, was one of our earliest backers and continues to work with us to this day. Our portfolio is about 400 companies now. They're worth about $10 billion combined. Hopefully that will continue to grow and scale over the next few years as we bring more companies out here to the US, and as we continue to capitalize on opportunities all around the world and some of the greatest talent that we work with all around the world. And so to jump into a little bit on clean tech, I mean, clean tech is a major part of our portfolio. And so I wanted to pick a few companies that are in our portfolio, tell you a little bit more about them, and give you some of the learnings of their journey from where they started to what they're doing now in the US market, both in terms of customers and their fundraising. Just as a brief overview, I've picked two different sets of companies here. On the one side, on the left, Alchemy, Connector, Silvera are three companies that are in the software clean tech space. On the right-hand side, Sapure and Xfuel are two companies that I work with really closely who are on the hardware and deep tech side of clean tech. They're very different learnings. They're very different exciting opportunities in both of these areas. At EF, we invest in clean tech, both on the software side and on the deep tech side. Alchemy is a company that helps concrete companies get to the optimal mix of their product to reduce carbon emissions and create low carbon versions of their products. Connect Earth is a company that we funded initially out of London, now has a huge US presence. They work on carbon accounting and helping to reduce impact in company supply chains and operations. Silvera is a carbon credit rating agency. You can think of it as they essentially help investors in carbon credits work out whether or not the projects that they're investing in actually have the carbon impacts that they say they're going to have, and actually lead to the outcomes they say they're going to have. Sapure is a company that we originally funded in Singapore. Sapure currently has just about to raise their Series B. They help oil and gas companies replace the high energy, high cost process of distillation with a membrane alternative. So instead of requiring heat to separate chemicals, they essentially use membranes. And Xfuel is a company that I've worked very closely with, which helps essentially is a alternative fuel. They take biomass and they turn it into a drop-in replacement diesel fuel that is used, in their case, in the marine industry. So we have a variety of different clean tech stories and learnings, and a variety of different adventures in this area. The common theme with all these companies is actually they were started outside the US. They now have a really strong US presence. And so I thought it was worth diving into a few learnings and some of the things that I think these founders and these companies have learned along the way and had to do to capitalize on that opportunity and make that leap. First thing that I think is really, really key is embracing incentives. I think that climate impact in and of itself is incredibly valuable. There is a narrative win behind this. Everyone wants this in theory, but the reality is that unless you're impacting the bottom line, it's really impossible to scale these types of companies. And so whilst a noble deed to work in this area, what I would implore any founder working in clean tech or working in climate to do is look really, really deeply at, is anyone going to buy your product, and is it going to move the needle on the bottom line? And I think you have to look beyond just the carbon teams or the teams that care deeply about this in the organization, and look to the organization's incentives to begin with. Ultimately, sometimes the most exciting opportunities are not necessarily are not necessarily going to be to the companies that most obviously are just pulling on wanting to decrease their carbon impact, but also on the companies that just want to increase their bottom line, just want to save money, or just want to increase their revenue. I mentioned Sapure earlier. Sapure is a great example of a company that really embraces this. What they do is they actually sell to the oil and gas industry, but their climate impact on the oil and gas industry is so huge through energy savings that it's both a company that's having a massive impact in clean tech, but at the same time, also saving massive amounts of money for energy companies at scale. So embrace incentives, look to the bottom line, look to what actually matters. Narrative is important, but actually creating dollar value is even more important. Second learning, hardware is really, really hard in this area, but it's exciting in climate. I think that any software climate company or clean tech company at the moment will have to try and explain why what they're doing hasn't been done before. If you're starting out at the seed stage right now, I think it's probably quite difficult. A lot of the opportunities, a lot of the carbon accounting, a lot of the credit rating, things like Silvera, etc., they've sort of been done. People have tried them. There's lots of reasons they don't exist. Often the most exciting companies that we see are companies that are actually building hardware and physical infrastructure. They're innovating on actual science. They're deploying deep tech. This is really, really exciting. However, they're really difficult. And I think what's especially difficult is raising the right money to be able to scale. I mentioned both Sapure and I mentioned Xfuel. Xfuel literally have to deploy plants. They literally have to build new infrastructure to make what they want happen. It's really important that you get the right investors early on in your journey who are going to be able to support that later on. You want, ideally, investors who are multi-stage funds and multi-stage funds who aren't afraid of investing in potentially capital-intensive activities later on. If you don't have the right investors early, it's really hard to get their support later on to be able to build this. What they're hoping for is that you'll find someone else to fund it. And the problem with that is that it's really hard to. So get the right investors on early. Don't be afraid of hardware. It's really exciting in clean tech. But at the same time, make sure to set the right foundations or you'll have trouble scaling later on. And the third learning about clean tech and climate in general is that you might be a clean tech or you might be a climate company even indirectly. I think that whilst it's incredibly exciting to build directly for clean tech, you also should look in general if you are operating in any sort of, if you're building any sort of company that's changing operations, that's changing what a business does, you should be looking at the carbon impact that you're having. You should be looking at how you impact the clean tech side of the customers that you're addressing. There are many examples at the moment of companies where, their core product, something like Tesla, their core product may be selling cars, but actually they make a lot of money from the carbon offsets and from the climate opportunities around what they do. I'm seeing more and more companies in our portfolio do this. I'm seeing more and more investors take note of this being something that matters. And I'd advise all founders to look into it. An area where I think that is really, really prominent is with agri-tech. And so I've also picked a couple of agri-tech investments that we have made and companies that we've recently been working with out here in the US. First one is Upside Robotics. Upside Robotics deploys robots into fields to optimize the spraying, the precision spraying of fertilizer. What that means is that they reduce climate impact by spraying less fertilizer and utilizing resources better, decreasing energy usage. Vivid Machines is a company that uses computer vision and AI to better help farmers optimize the maintenance and growing of orchards. Again, it's a company that, even though it's not climate or clean tech directly, has a massive impact indirectly in clean tech and indirectly in climate. It's one of the key reasons that they've managed to raise money and that they're scaling and that their story is really exciting to investors right now. A few major learnings from our agri-tech portfolio. What I would say is agri-tech is an incredibly exciting opportunity. There are millions, hundreds of millions of acres of farmland in North America. In theory, there is an exciting opportunity here. I spend a lot of time talking with some of the biggest multi-stage funds about how excited they are in theory to invest in this area. Having said that, it's also a really scary area. It's an area that investors tend to run away from. Why is that? There's a lot of history in this area. There are a lot of failures. There are a lot of things that have gone wrong and investments that have gone to zero in the past. And so what you'll find as you pitch investors in the US and as you start to work with potential customers here is that there are some common pitfalls that you really need to look out for. The first one is that this is true in any business, but I think it's especially true in agri-tech. Value creation and capture is really, really, really key. And when I say value creation, I don't just mean theoretical. I mean having real case studies from customers about ultimately what you're moving the needle on, how much dollar you're creating for their bottom line. And once you factor in all the complexities of a agricultural operation, a farming operation, the operations to distribute produce, what your startup and what your intervention actually does at the end of the day is really, really key. And then off the back of that, it's how much of that do you capture? How much of that money can you keep as a business? The truth is that farmers aren't used to tech business models, for example. They're used to buying a tractor and paying for a tractor. Ultimately, you know, when we're trying to build high growth, scalable tech companies, we're often looking to capture more value than farmers are willing to pay, or that the agricultural industry is willing to pay. And so really trying to understand not just that you create value, but that you're able to capture it, and being able to prove that is really key. Our best companies try and get very, very early contracts to demonstrate this, and try and get contracts that are based on milestones which show, hey, if I'm able to create this value for you, here's how much you're going to pay me. Even if you haven't yet got the proof yet, that's a great way of getting customers on board and convincing investors that you can do it. Second thing is that everyone is skeptical of go-to-market in agri-tech. Distribution really, to a certain extent, trumps product in this area. One of the key questions that any of our agri-tech companies will get as they go out to speak to investors is how exactly they're going to scale, and how exactly they're going to scale rapidly. You need a pathway if you're going to be a venture-backed company to making $100 million or more in revenue, and you need to be able to convince people that you're going to be able to get there relatively fast on venture timelines. And so understanding how you're going to access this fairly legacy customer base and do it at scale and do it rapidly is really, really important. And finally, you really need to look at what has failed before. I said to you before that agri-tech is an area where there's huge opportunity, but there's a lot of scar tissue. You need to convince people that you're different. One of the worst things that you can do is go into an investor meeting and not know the 10 case studies of companies that have come before you and that haven't managed to make it, or have tried something similar, but haven't quite managed to have the impact that you wanted to. You're going to have a lot of scar tissue you're going to have to deal with going into agri-tech. There are exciting opportunities. There are a lot of reasons for why now, but you're really going to have to understand encyclopedically everything that's come before you so that you can do something different and hopefully do something exciting going forward. Thanks everyone for having me. I hope these remarks were useful, and I hope you'll be able to factor this into what you're doing next. More than happy to talk outside of this context as you look to expand to the US and as you look to build clean tech or agri-tech companies. As I said, we're interested in working with founders from all around the world. So if I can help you on your journey, please do reach out. Happy to hand over to the next speaker now.
Joe, great ending to that. Look at what has failed before. You're absolutely right in that. You know, redoing the same thing won't get you any efforts. Reiterating the same thing that has been done will definitely yield results. Great. So next up, we have the founder of Epic Angels, Maike Doyle. She has had experience across transactions and finance, and has been mentoring startups at multiple platforms, including Startup Bootcamp at NASDAQ for entrepreneurs, as well as has been a director at Founder Institute. And now currently she has started Epic Angels, helping companies, early stage companies, with their expansion, with their growth process. And Maike, over to you. Would love to understand what you're doing for women-led startups in the US, and what sort of opportunities are present for them within the ecosystem.
Yes, good morning, everyone. I decided to go without slides. So my name is Maike Doyle, and Dutch originally. Back in the day in the Netherlands, I was working on a book that I hope many of you heard about, The Business Model Generation, The Business Model Canvas, The 9 Building Blocks. I hope you've all been using that in your journey. My company, we actually produced a book that brought me to San Francisco about 10 years ago. I moved to San Francisco. And I further worked with startups. I mean, that's also why I got to work with so many different accelerator programs. I got to San Francisco, expanded my own company. So I know, even as a founder, what it is, right? To make that journey from the Netherlands or from a different country into the US. How does that work? How do you find customers? But I did my exit about 4 or 5 years ago now. And with that, I moved to Singapore. However, just a few months ago, I moved back to the US. Today, I am in San Francisco, living in New York, actually, at the moment. Very confusing. But Epic Angels is what I started in Singapore, because what I really saw is that many female founders are struggling to find the funding that they deserve. But for me, what is the real reason behind that? Simply, we don't have enough female investors. So that is what I'm set out to change. That is my personal mission, and that's why I started Epic Angels. So right now, we are the largest female-only angel investment network. We have more than 350 female investors all over the world. We're based in 30 countries, our investors, so pretty cool. Singapore is number one. US is actually number two in terms of investors. We only invest in startups in APAC. So I think all of you are down in India. So yes, that's you as well. So I would be very excited to hear more about that later, or in some direct messages and so on. So I want to share a few things with you on that investor journey. You want to expand into the US. You're looking for funding. And it's been said before, right? Make sure you already have a product, that there is something working. Same goes for funding. Do you already have a couple of investors, at least in India, before you go out? Don't go immediately from like, oh, I have nothing, let me go to the US, right? That's not going to work, right? Really make sure that you show some traction, that you show some success already at home before you are expanding. And when you get into the US, don't try to schedule everything up front over LinkedIn and email. What I learned in the US, and I don't know how it is in India, but what I learned in the US is often when you are around, you just send someone a message like, hey, shall we meet this week, next week? That is actually what works really well. So you can do that very short notice, and that's okay. So how do you get in, right? How do you get introductions? How can you find your investors? I mean, you have to realize investors are receiving many, many, many pitch decks every day, every week, every month. I mean, even Epic Angels we're doing well, but we're still a relatively small network compared to all the big VCs out there. Even we receive more than 100 pitch decks every month that we need to go through. So if we receive that many pitch decks, I mean, the VCs are definitely receiving hundreds, if not thousands a month. Have you ever thought about how many times, how long someone actually spends on your pitch deck? That is usually on average only about 2 to 3 minutes. Super, super short. So how are you going to grab that attention of that investor? How are you going to do that, right? Because 2.5 minutes, it's nothing, right? That they're spending on your deck. So what I've seen, what's the most successful, at least works for Epic Angels, and it's going to work for all the other investors out there as well. How do you increase your chance to get actually a meeting? That is through a warm introduction. If you're approaching an investor cold, it is extremely unlikely that you're going to get into the next stage. So you need to get a warm introduction. How do you get a warm introduction? One of the most, well, everything is difficult, but I wanted to say most easiest thing to do is to try to figure out who else did this investor invest in. You have databases like Crunchbase, and there are many others out there on the markets. How can I figure out who else did they invest in? Who is the founder of that? Can I get in touch with the founder? Because as you know, founder to founder is definitely more likely that you actually will speak to each other. Specifically, if it's a founder from India as well, like, ooh, I saw you've been successful in raising. How did you do that? How did you get in touch? Tell me more about this investor. What's their investment thesis? I actually fit. Would you mind doing an introduction? Right? Because if I have spoken with another founder and I had a great conversation with them, and they're recommending someone else to me, I'll definitely spend a little bit more time on this. Like, oh, this is a warm recommendation. Someone is sending this to me because they think I might be interested. I'll take a little closer look. And that immediately increases the chances that you will be invited for that first conversation. Definitely as well, if you want to get funding from the US, what is in there for the US? Right? figure that out as well. Like, because it's not just that you want to get the money, but do you want to get your product over there as well? I assume you're all doing that. So what's your plan? Are you going to move? Are you the one that's actually going to get on a plane, move your whole family to the other side of the world? Or when is that moment that you're going to do that? Or what is the team that you're going to build? So make sure that you have that plan super, super clear. I see it too often. Startups are coming into the US, have one meeting, and even when I then ask, okay, when are you back? Then it's like, I don't know yet, right? I mean, that's not the right answer. That's not the answer that the investor wants to hear. They really want to see that you're invested and that you're not just super optimistic, like, oh, let's see if I can get some funding and we'll figure it out from there. No, they really want to see that you have this plan and that you want to get out there. And that's also going to help you in building that network. Every conversation you have, ask, who do you know, right? Who could be that investor that I could speak to? Who could be that network? Really, really pay close attention. I mean, even here on this panel, I love it so much, right? Like we have Microsoft at first. For example, as Epic Angels, we work very closely with Microsoft as well in their program Code Without Barriers. So that's a way how we share deal flow. Republic, I always mention it actually. Republic was where I personally did my very first angel investment. So super cool. I can totally recommend. Entrepreneur First that we just had on as well. We have a super active deal exchange with Entrepreneur First. We always, as investors, take a very close look at what are the startups that are coming out of there, what are the demo days. We always attend. So don't underestimate how well connected everyone is in the scene and how we all know each other. So you really need to figure out, how do I get in? What is my entry point into that? And be really, really invested when you're doing that. And so the other thing that is maybe a little, a bit more practical as well, we spoke a little bit here and there about legals. It does matter where you have your legal entity. Even though from Epic Angels, many of our investors are actually dialing in from Singapore, like they're investing from Singapore. Even for us, it's very important, where do you have your legal entity? Many US investors do prefer you to have that legal entity in the US. Because India, for tax purposes, can be pretty complicated as well as an investor. It's easy to put your money in, but it's very difficult to get your money out unless you pay 20% to the government, and investors don't like that. So if you can structure that in a different way, I would definitely recommend you to do that. And there's so many different tips and tricks that I can share with you. When I was living in San Francisco before, I actually wrote a little playbook. It's called the Silicon Valley Playbook. And the link will be shared with you somewhere in the chat message. This is a book that I wrote a couple of years ago. This was specifically made for Dutch entrepreneurs, but hey, I'm assuming 98% of everything in there is also relevant for all of you. This was really made for entrepreneurs who wanted to make it into the Valley, who wanted to get clients there, who wanted to get investors there. And it's full with tips and tricks. It's full with stories from entrepreneurs. In this case, all Dutch entrepreneurs. Sorry about that, right? But again, it was specifically written for the Dutch ecosystem. But again, it's going to be super relevant for you as well. And we try to make it a little bit more fun and interactive. Epic Angels didn't exist yet at that time, so you will not see any reference at all to Epic Angels. But of course, if you have any further questions about Epic Angels, about our investment thesis, or if you have an amazing pitch, would love to hear more from you.
Thanks, Maki. You have really spoken to the psyche of the early stage founder and anyone who's starting up their company. Thank you for that. Coming up, we have the vastly experienced Rajiv Roy, who has led companies across finance and semiconductor space, and is now a partner at Three Lines VC, investing in companies which are investing in tech-enabled businesses. And I believe most of our participants here would be very keen on understanding more about this space. What about tech-enabled space in the US is so exciting for for the industry in general, and of course the opportunities that exist there.
Okay. Thank you very much for that introduction. Let me see. Can you share? Can you see my desktop?
Yes, you can.
The PowerPoint presentation?
Yes, that's visible.
Okay, very good. Thank you. So thank you for that introduction. Yes, so I'm with 3lines.vc, and I'm the Chief Operating Officer and Senior Partner there at 3lines.vc. We are a Series A/B venture capital company, and we invest in companies that are typically a little bit later stage than your standard angel companies. We are in our third round. In our first round, we invested in angel companies. In our second round, we invested in kind of like a Series A, but now we are more towards a Series A, Series B type company with typically we expect revenue and ARR to be around that $1 million mark. And we look for technology-based solutions, and we are domain agnostic. So this is where we fit in the entire life cycle of company growth. They start off at angels, maybe move to venture seed capital, then to a little bit more later stage growth, and then finally private equity. And so we are somewhere in that range of revenue where we prefer to invest in companies. Our thesis is investing in both US and Indian companies. We typically say we want to invest about 60 to 70% in the US and 30 to 40% in Indian companies. And today in our portfolio, we do have several companies that we have invested in India. These are some of our exits that we've had in cybersecurity, in media, in technology-based media. And so this is just some examples of some successes that we have had. Now, we've talked about fundraising, and I'm sure a lot of the people in the audience are excited about fundraising. And Shaloo earlier on also mentioned that it's not where the buck stops, it's where the buck starts. Startup founders get very excited when they raise money, which is a good thing. It gives them a way to grow. We expect that they get even more excited about revenue than just raising money. Our expectation is that, and this is a little bit complicated looking graph, but this is, let's say, your capital raise, and this is the revenue that you are generating. It is clear that in the beginning, you will have a lot more capital raised than your revenue. But at some point in time, your revenue should be greater than your capital raise. Our expectation is that at least 2 to 3 years after we have invested, that your revenue is at least twice as much as your capital raised. And if we see that your green line is actually a straight line paralleling your revenue line, then it raises all kinds of red flags in our head that these guys are more focused on capital raise to hide their problems rather than actually generating money. So how do we look at companies in terms of capital raise and revenue? Okay. So Shaloo mentioned, you become relevant to an enterprise. Well, let me dig a little bit deeper. So the question we would ask is, have you truly identified a painkiller, or is it just a vitamin? So imagine, you are in the middle of nowhere and you have a very painful toothache, and let's say you're camping with a friend, and the friend says, I got this pill for $1. I bought it for $1, but I can only let you have it if you pay me, say, $20. Okay. Now, if you have a massive toothache, you're going to say, oh, here's my $20. Give me that pill. I need it now. But let's say I turn around and tell you, I got a vitamin that I bought for $1. And you're again, camping out in the middle of nowhere, and you say, this vitamin is good for you. I'm going to sell it to you for $20. I don't think you're going to close on that sale. So, we distinguish between painkillers and vitamins. Then the next question comes about is, how well do you understand the customer's pain? Are you even guessing that it is as painful as a toothache? Now, I'm going to tell you a story. It's a little bit personal. It's a little bit gross, but it illustrates the point. Years ago, I was in Germany and I was on a business trip, and I had the world's most painful toothache and my jaw was hurting. And I went to this German dentist and he looked at me all over and he said, you know, your teeth are great. All I can do is give you, and he gave me a painkiller, but I don't know what is the root cause of your pain. So then my next trip was from Germany to Korea. So now I fly all the way from Germany to Korea. And it was the world's most painful plane trip. My ears were hurting, my jaw was hurting. Anyway, I land in Korea, I go to the hotel, I go for a swim, which is my normal way of recovering from a long plane trip. I swim long distance, come back in, and this is the gross part. You know, I used an earbud to get water out of my ears, and in the process got rid of earwax, and lo and behold, my toothache was solved, or my jaw ache was solved. My point in this long personal and gross story is that even if your customer tells you that they have pain, do you or your customer truly understand that it's a toothache, or it could be something else? In real world, it could be that the customer is saying, I've got this cost problem and I need your software solution to solve this. But it turns out that some clever person within the company realizes that it's just a process change, and a little process change, and boom, the pain goes away. You come back for the next meeting and the customer says, oh, we solved it. You know, that the pain that we thought was a pain was really not a pain. So, you know, constant conversations with your customer, to staying in touch, truly understanding how well do they understand the pain, understanding what are the possible solutions to solving for that pain could save you a lot of capital raised headed in the wrong direction, okay? The other thing we are focused on, because we, you know, in the painkillers, distinguishing between painkillers and vitamins, and this we do this very early on in our deal screening, is the cost of customer acquisition. We see that from a cost to revenue standpoint, we see that painkillers could cost only 60% of the effort of raising your revenue, okay? And that vitamin sellers may have a cost revenue of 2 to 3 times the amount of revenue that you raise. So you're spending that much of expensive marketing and sales dollars just to try to get a small amount of revenue. If you as a founder are seeing these percentages, right? You see that you're spending twice as much in customer acquisition versus revenue. I suspect you have a vitamin as a solution, and you need to look deeper into your offering, into your unique value proposition, and trying to understand with the customer is really, you know, what does it take to identify the painkiller versus the vitamin. Now, in terms of, we are talking about US expansion. Clearly, we see, you know, all kinds of, you know, pitch decks out of India, and, you know, one of the big, you know, use of funds always will be, we want to go to the US, we want to go to Europe, we want to go to Southeast Asia, okay? And you look at their revenue trend, and the revenue is, you know, let's just say 2 to 3 million US in India. Now, you have to ask them that question. You have not, I mean, you assume that the TAM is big enough, and it's not just a few $1 million. You assume that it's in the hundreds of $millions, and you have not really conquered a significant percentage. And here you want to go off and use expensive capital raise to go to the US. So, you know, we always say, please, you know, just expand your market share in your home turf, solve all your technology problems, solve all your marketing problems, get your processes all lined up, get your sales team all lined up, and understand your home ground before you say, let's go to the US. I know it's exciting to talk to investors on your pitch deck and say, we're going to expand to the US, but from our standpoint, it raises red flags. Now, of course, there are exceptions. We've run into some very exciting companies with 95, they're sitting in Chennai and 95% of their business was in the US. Okay, there are exceptions, but those are really far and few in between. And these guys, hats off to them. They sat there and they addressed the market, the applications for a major e-commerce company sitting in Chennai. But those are truly the exceptions. A bulk of the companies have not solved their home ground expansion problems, and to think that they will just go to the US and all of a sudden, their revenue will shoot up. No, it just doesn't work that way. And then finally, we look for a customer financial pipeline with minimal churn. And this minimal churn is very important because it goes back to the painkiller and the vitamin. If there is an ongoing pain, you know that the customer, and you are solving for it, and you're solving for it at a right price and a right value to the customer. The customer is not going to leave you, unless there's something really, there's a switching cost, right? So basically, a financial pipeline that says, oh, these are the possible customers, and these are the customers historically, they've paid this much. And we see that the customers are staying with them, and they continue to renew their annual contracts or 2-year contracts. Those are, for us, very exciting companies to invest in. And we sit in Dallas and Denver, and on our board we've got a lot of us have CXO experience. We've done, I personally have led global marketing and global sales. We've got people on our board at 3 lines that have been CTOs of companies, CEOs of companies. So helping US expansion is a non-issue, and our Rolodex is deep and wide. So helping in the US expansion is a non-issue. It really becomes, is it justified? Are you coming with the right painkiller? Do you have the right understanding of the market? And are you sure you've gone off and do you have enough of a customer base in India or wherever your base is before which you jump off into expanding in the US? I'm available at the email address below, and I want to thank all of you at D Globalist to help and to allow me to speak to the folks. Thank you.
Thanks, Rajiv. I think I've never heard an analogy like that. Customers' pain point being compared to the earwax, and I believe that comes experience that you hold. So thank you. So next up, we have Parikshit Sharma, who is managing 140 plus deep tech startups valued at over $10 billion. And Parikshit, I have to ask you, how are you doing that? It's a big portfolio, and we'd love to know.
Yeah.
We'd love to understand that, as well as what you're talking about, biotech and deep tech in the US. Floor is all yours.
Yeah, thank you. And by the way, I'm not the only one managing this portfolio. There's 3 general partners here in San Francisco, 2 in one in Singapore, 1 in New York, 1 in New York. So yeah, we work as a team. SOSV is a team sport, and let me pull up some slides to share with you how we do it and what we're about. SOSV is a deep tech venture firm, and we're on our fifth fund. It's a $306 million fund for early stage deep tech, and through we are a sustainable economy fund. So it's not only clean tech, it's not only biotech, it's not only climate tech. It's we really want to think about reinventing the means of production. How do we decouple the bedrock of modern day capitalism from petrochemistry, and how do we also think about a burdening healthcare system as the world grows older all over. So at a snapshot, how we do it, we pick a global presence. So we're not just a US fund. Some of our biggest startups have come from, say, Latin America, Singapore. We have some from India, some even from sub-Saharan Africa, and two in Europe. We had a bigger practice in Europe, and will have a bigger practice in the following years. But yeah, truly a global firm, and majority of the capital at SOSV is managed by two thematic brands. So I sit at IndieBio, which is more on the you know micro scale. So things, if the things that our startups are working on fall on your foot, they won't hurt because they live in test tubes. So it's green chemistry, healthcare stuff, and hacks is more on the hardware and industrial automation side. So the stuff that they're working on, if it falls on your foot, it does hurt. And how we look at sustainable economies is through three big pillars. The first one is human health, so healthy people through therapeutics, diagnostics, healthcare systems. The biggest bucket is our climate bucket, and that's where 65% of the capital is allocated. And this includes clean tech, ag tech, sustainability, ESG. Type work, and then 15% of the remaining funds that we have are allocated into emerging economies. So we have quite a big presence actually in Nigeria, in LATAM, and slowly it's growing in India as well. So our model is more, let's build a portfolio. Let's build a portfolio that's diversified across emerging deep technologies. And then also let's cover as many verticals as possible when it comes to deep tech, right? So that's kind of our biggest value proposition to founders, universities that are working on some of these deep technologies. It's the ability to build products in a category that have historically been underserved by venture, and we specialize in deep tech for that reason. So and this is kind of why founders like us, is because we are cross-disciplinary by definition. So we were the first VC to do cell-based meats, right? But it wasn't food scientists that invented cell-based meats. It was actually cardiac surgeons and stem cell biologists that were looking at muscle regeneration in the human body. Right. So we know that to win in deep tech, you have to be multidisciplinary. So that's how we look at our sourcing. And we also know that there's different areas in the world that specialize in different kind of knowledge, and different universities have different focuses and their centers of excellence all over the world. So we choose to pick scientists sometimes as early as their PhD days. Many of our top companies have been formed when the founders were PhD candidates. And then, yeah, we tackle huge markets with them. So we can start super early. And, our investors ask us why not just do climate tech? Because that's where most of our money and fastest growing portfolio companies are. It's for this reason that, having healthcare companies makes us better climate tech investors, because deep tech requires you to understand technology. And then how we are different from other firms too is we have infrastructure. So my office in San Francisco has lab space. We have Biosafety 1, Biosafety 2 labs, same in New York. We have a big fabrication facility in New York, in Shenzhen, China, and now in Pune, actually, in India. So, when it comes to market expansion, we're trying to expand into India with the hopes that India will slowly then start expanding through our channels all over the world, right? So that's how we're thinking about it. How do we build a flywheel or a hub and spoke model where India can be a very important hub or spoke. However, we want to establish a hub so that many spokes from India can come into it, right? And yeah, we think when it comes to our thematic focus, healthcare is going to continue to be very important. Like there's here the slide talks about diabetes in the American context, but these are chronic diseases that are prevalent in India and in Asia. So it's really thinking about what will make talent and people healthy and allow us to keep creating productivity gains is how we're thinking about it. And soon we will have an initiative for healthcare in India. Again, the idea is we bring our hub to India, and through that we coalesce and catalyze startup investment there and then bring them to the world. So yeah, I think I covered this, so I can move on. But truly, we believe that this portfolio model of investment is the way to go. A lot of VCs will talk to 500 companies a year and invest in 3. And the thing is, the companies they say no to, they love the company many times, they love the founder many times. It's just that that company does not fit their stage or the business model they have. So we want to be flexible and we want to say yes more to founders we admire and technologies that are promising, because it won't take a silver bullet. So what I have on the slide is a rendering of the world's largest direct air capture plant. If it works, it will remove, carbon equivalent to 850 cars a year. Like we really need a reinvention of how we're producing things and how we're living. And that's where, it won't come from one thing. We have to think about, really humble things: plastic, water, ice cream, leather, and marine diesel. So, Secure that Ross mentioned is one company that we share with Entrepreneur First. And no one really thought that a membrane that goes into every pipe in a factory would be that big a company. But the thing is, it's one of the biggest energy drivers and bottom line impacts that a factory faces. So we really have to think at this built environment that we live in and what we eat and how our health is being impacted by our environment, and go after those sectors. And a lot of people ask us, how is deep tech faring against AI? I can tell you almost every category, every vertical I have listed on this slide, our companies are using AI acceleration or totally AI native enablement to reinvent these materials. And in terms of how we look at this portfolio model, we end up moving a lot of money is how we do it. So the difference between our funds and most VC funds is we don't keep reserves. So a typical VC firm will spend 40% of the capital and reserve 60% over the lifetime of a fund, which can be 7 to 10 years. But our funds, we have to spend the 300 million that we raised this year in the next 3 to 4 years, or it's gone. So as a result, we end up being very active. We lead pre-seed rounds. We will help with incorporation, and we can help structure the right corporate entity. May it be a Delaware C Corp in India, in the US, and a subsidiary in India, or even vice versa. And then we can co-lead the seed round. after that, and then come back and participate in A. Sometimes we do B. So as a result of us being so active and having this portfolio model and really building trust, right? We put our own money into everything we do. We have skin in the game, and we are so hands-on that we've become somewhat of a market maker. So our goal is for some of the fastest moving and the best deep tech startups anywhere in the world to get access to top tier VCs at in the valley, which continues to dominate funding. So all these funds that I mentioned, it's not just the fact that our companies have raised capital from these funds, it's that we know general partners and we serve alongside GPs at most of these funds on boards. So we're really hands-on in everything we do. And yeah, this hub and spoke model I mentioned has meant that we have built offices all over the world, and our goal is to, through the Pune office, to keep doing more in India. We're learning there's serious challenges, especially on the regulatory side. Like one simple example is in safes, simple agreement for future equity, which Y Combinator pioneered. So easy to invest in startups anywhere in the world through safes, but in the Indian context, it's gotten harder and harder to use safes. There's an Indian safe, but US investors don't like to invest through those. So I think slowly, as we go deeper into India, we're building, and also thanks to D Globalist and firms that are helping us, we're building greater context and understanding on best ways to streamline our investment into India. And this is something I'm really proud of. More than India expanding to the US, our American companies are expanding into India very quickly. And I think that will kick off a flywheel where the reverse might start happening soon. So this is Laurus Bio in Bangalore, and 4 of our companies are scaling up in India. These are biomanufacturing companies, and if you were to build the infrastructure, your revenue to asset ratio is thrown off. But thanks to Loris and the deep capability that the Indian biomanufacturing and biosimilars sector has, we have the level of trust to manufacture in India, and this has really propelled our latest stage companies forward. And yeah, I think this is one last slide I'll bring. Because we see so much and we invest so much, some of the world's largest conglomerates are our investors. And we love working with corporates. We have a saying at IndieBio that when it comes to deep tech, you can't be a disruptor. You have to be a diplomat. Because if you start building all the infrastructure needed in deep tech from scratch, there's no way you can do that in 10 years, which is and compete on the stock market with an AI company that can grow to billions in revenue so quickly. So as a result, we believe in diplomacy. We believe in partnering, not trying to threaten an incumbent. And there, what we're looking for is, so India has some of the biggest and most successful conglomerates in the world. So we want more and more, say a VP at Reliance to reach out to us and to work with the head of sustainability at Tata. I'm just making these names up, but the spirit is very much there. We really want to partner and build this market and really move money in this market beyond just providing mentorship. So yeah, that's a very high level into how we're thinking about deep tech and a global / Indian pathway or avenue into deep tech, and yeah, want to do a lot more in India with India, and keep building this flywheel.
Excellent. Thanks, Parikshit. That's been great. I believe a lot of our portfolio companies, D Globalist as well, our clients would be very interested in speaking to you very soon. People are building similar spaces. And yeah, thank you so much for that brief. Excellent.
Absolutely. Thank you.
So we have Anirudh next up. Yep, we have Anirudh next up. Anirudh has a strong consulting and strategy background and is now a partner at VNext in the Bay Area. Anirudh will be quickly speaking about SaaS in the US and enlightening us more about the same. Over to you, Anirudh.
Thank you, Bhavya. Hi, everyone. Thank you. Thank you for coming. Just to give a quick background about VNext, we were established in 2012, set up as a Japanese fund initially, with the two partners being ex-entrepreneurs from Japan. Once they sold their companies, they started the fund to look at both India, US, Japan, and Southeast Asia. Eventually, I think after 8 funds, this is our currently 8th fund. Every fund has typically been $100 to $150 million in size. And we've been a generalist fund and specialist at seed. So I think the thesis has been largely the same. Engage in the first 90 days of a company. It could be pre-seed, seed. Sometimes it is revenue. Sometimes it's pre-product and pre-launch as well. And help the companies go public. So I think our initial ticket sizes start at 1 to 3 million, and then we can keep investing up to $10 million across multiple stages. In terms of the portfolio now, it's around 250 companies globally, out of which 200 would be in India. And these are all spread out across consumer, fintech, a little bit of deep tech and enterprise. So I think very, very generalist and bottoms up as investors. And the Southeast Asia portfolio is also very similar, around 70 companies, all backed at seed. The largest ones being Tokopedia and Gojek on the Southeast Asia side. And on the India side, we have companies like BharatPe, NoBroker, MPL, ShipRocket, etc. So very, very wide variety of portfolio companies. I think just talking about like what we specialize in and what's the specific thesis that we follow for the fund. I think there's a big Japan, India, and US collaboration angle that I think had been underpenetrated for a while. So I think a lot of our LPs and also people that we work with closely are large corporates from Japan who have like a very specific interest in terms of exploring business synergies and also wanting to explore direct investments into some of these companies, given the slow growth of the Japanese companies locally, both public markets and privates. I think a lot of the corporates want to expand into other parts of Asia, India being the number one geography for multiple reasons. One is the growth rate, young population, and also the closeness between the policymakers in both the countries. So that's been a big value add that we help a lot of our Indian companies move to Japan because that's an interesting enterprise market. It's probably the second or third largest enterprise consumer globally after the US. And I think it's very, very focused on price and the value that you can bring onto the table. So that's been a little bit of the thesis for the fund. I think talking about like few trends that we've seen across the portfolio, especially on the SaaS side, is I think it used to be a myth that Indian SMEs and Indian mid-market companies don't pay for software. I think we've seen that with a bunch of companies recently. A company called Gushworks, which is similar to Twilio in the US, is doing around $200 million worth of revenue just from India. There's a company called Darwinbox, which sells HRMS solutions. Obviously, a large part of their revenue comes from the US, but they still have a decently sized India revenue opportunity. So I think companies like these, we're seeing a lot more, at least there's a lot more openness to meet software companies and tools and buy them. Again, it's nowhere close to where the US is right now, but I think it's like they're going to be like large outcomes which will focus on India and are being built from India, which will be both services and product companies. So that's one trend which I think we're definitely looking out, that if you can uniquely solve a problem for the Indian SMEs and mid-market, I think that's a decently growing revenue opportunity. Then one more thing we are seeing from India, especially around the AI wave, is there's a lot more action around the AI services versus product-led infrastructure slash dev tools from India for the US, because that's a super competitive space and a lot of founders have found it hard to like exactly pinpoint on what the white space is. I'm sure there's going to be a lot of winners in that space, but it's been hard for us to underwrite who could actually have a long-term moat, because the way artificial intelligence is changing and the way people are innovating, I think every 6 weeks we have a new product. So I think unless you're based in the Bay Area, have raised a lot of money, I think it becomes hard to keep iterating and figuring out like what exactly is the path. So I think one interesting thesis which we've been following is AI-enabled services from India, because Infosys, TCS, all of these large software companies are now in a phase where they're stagnating in terms of revenue. And because of AI, you can actually automate a lot of business processes. And there's a lot of emerging theses which are going to come out of this AI-enabled human in the loop kind of a service. So, for example, we've invested in a company called Gushworks, which is a marketing automation company. So they're trying to replace the mid-market agencies in India that used to be like outsourced destinations for SEO, local performance marketing and everything, but with an AI-enabled angle to it, which can give you better economics. And like one human in the loop can actually service like 50 customers and also personalize it using the technology layer versus having like 50 account managers to manage like 50 customers. That's one thesis, that how can you have a India-specific angle, which used to be services heavy, both for design, both for marketing, for technology, for software building, and how can you use a platform leverage to actually give better results and also bring down the cost and efficiency and improve the efficiency. So that's been an interesting point, that I think India is largely going to be a software exporter and service exporter. So I think why don't we just make it more efficient and try to get like a larger market share, which I think a lot of the old generation services mid-market services agencies were not able to do it. So that's one example of how we're looking at things. We're also looking at a few companies in the Salesforce and SAP or the customization as a service zone, but all AI enabled. So I think this is one trend which I think we're very excited about. Then I think talking about like just the US in SaaS right now, the SaaS companies in the US right now. I think few observations by being in the Bay Area have been one. I think this new artificial intelligence and ML wave needs a lot of money because one, like the incumbents have never been this active and agile in adapting to how things have been moving, both across horizontal platforms and also like vertical specific platforms. So it's going to be an interesting next 24 months to figure out how people are looking at very horizontal AI models. So yeah, we've not done much on the horizontal AI front, but I think we're looking very closely on vertical opportunities. So that's like the another right to win, to invest, and also for like Indian founders to build in the US, that if they can exactly identify a very specific problem that needs a solution, and then try to build it out with their domain expertise. I think that's a better model where you have to raise minimal dollars because you're not worried about the competitive landscape from all the sides, but you can actually play a game. Obviously, the sales cycles for some of these products are long because it's a technical product and it's not easy to sell. But I think once you can crack it, I think it's very sticky, it's very repeatable. So at least my suggestion or my observation has been like verticalization of software is a better opportunity for international founders to come and build in the US versus trying to raise $50-60 million seed rounds and start competing with like very, very seasoned founders in very crowded spaces where no one knows who's going to be the winner. So yeah, those have been like some of the closer observations in the last 6 to 12 months that we've been seeing on the software side. But I'll be more than happy to take more specific questions in the Q&A session. So yeah, that's all from my side.
Great. Thanks, Anirudh. That's a different viewpoint you've presented today, and I appreciate that. Excellent. So next up, we have the managing director of Concentrix, Mr. Raghavendra Swamy. He has been an IT leader for over 3 decades and has been instrumental in some of the key developments in IT in India. And just to name one, setting up the telecom practice for Wipro has been one of the largest achievements. And Mr. Raghavendra Swamy, over to you. We're very happy to have you on board today. Would love to understand more about your perspective on building teams for cross-border expansion. We see a lot of people and we see a lot of clients coming in and trying to understand what are they missing out in their team structure when they have to go global. So we would love to have.
Sure. Yeah. So thanks, Bhavya. And it's nice meeting you all. So yeah, I think as they say, like innovation and the speed reigns supreme in the world of tech startups, right? One element that takes back seat, but which is very critical, is the organizational design, right? So when people tend to forget that when they are scaling up, and it's good to see so many of you on this call really taking that the direction where, for example, D Globalist is coming and helping in setting up and scaling your enterprises beyond the boundaries. One of the key factors that you want to consider is like, how do you set up your organizations when it is expanding into the, for example, in this case, US, right? So, I have been part of a couple of journeys, like in the Global Edge, for example, which got successfully sold to Altron in a tech startup in the embedded space. And then recently Procurma, which is a mid-sized company, which, again was acquired by Concentrix, where currently I'm serving as managing director in the couple of verticals. So if I could share the experience from the journeys, right? It has to be a well thought out plan. When you set out to expand into the international market, what's the commitment and what's the vision that the CEO on board has? So that has to be. It's not just because your product is doing pretty well and you're getting the market is pretty hot and you have a differentiator. There is a lot of innovation. Those things are great, but do you have a clear, the organizational structure plan along with that? So that's where the growth will be sort of I would say smooth, and you won't have much of the hiccups, right? When we were, for example, in Global Edge, when we were trying to expand into the US, right? Do we have the right set of the customers? Do we have a sales team that we need to present it there? What's the kind of the team structure that we need to put in place? So as I think most of like whether there is a deep vertical teams that we need to put in or an horizontal team. What's the, or is a matrix, which is basically like you have the practice teams in the in India, and then there are country heads or the geo heads in the US working with them. That could be one combination. So you need to definitely work through that whole model along with the product features and the roadmap. So that alignment will ensure that you have the right thing in place. So another thing that I want to highlight is a lot of times what happens is like people try to combine product management and the engineering, right? So that's another thing that you need to ensure that they're two different things. So you're not putting the same the leaders to handle the product management and the engineering. So it is always better to separate that out so that the product management is focusing on the art of possibilities and what the customers want, rather than looking at the feasibility, which is more of the engineering side of the story. So that's one thing that you want to definitely make sure that you have addressed that. And then the next aspect is the marketing and research. So whether there's a good team that's put in place for that. And the another aspect is, which is very important in the current scheme of things, is the privacy and the legal aspects, right? The data security and the privacy. So what kind of data you are collecting from your users? How are you protecting the privacy of your users? So that's a separate, very unique thing when it comes to the expansion into the cross boundaries. So you need to think about that aspect too. Apart from, definitely the sales should be aligned to typically we have seen directly to the CEO, not to the product part. So those kind of some of the nuances you need to make sure that you've addressed them in your journey. Other than that, you have to, for example, in Global Edge, when we were looking at the auto segment expansion, is Japan a good market for us? Like we expanded in the US, then we were looking at Japan. So what is the kind of model? Do we have our story built in? So to take that story into the market, do we have, what kind of approach do we take? Do we go with a, still we were small, do we go with a retainer approach rather than building a dedicated team for that, the geo, right? And similarly in US, when we were like, pretty centered in the Bay Area. So we wanted to take into the, the Midwest and the, the East Coast. So how do we expand into those regions, right? What kind of models is best suited? Is it like a combination of the team that's present in US combined with, a supporting team in the India till you scale up, and then you start building the centers in different, the geos of the US. So these are some of the things that, you need to take care. And also as you're scaling up, the teams have to change their mindset from, the leaders are leading the team rather than, that's how they start off. But then they have to transform into leaders who are leading an organization. So that's a big jump, right? So how do you ensure that that is taken care of? Do you provide proper mentoring from the industry experts to your different leaders in the delivery organizations, the sales organization, so that their mindset is changed and they are properly aligned to scale the growth that you are envisaging? So that's something that we did successfully, whether it is in Procurement or Global Edge. So we brought industry experts as mentors who could, provide the guidance to all the leaders, and so that helped us to scale our business to a good extent. And the other aspect is, I think definitely I'm sure that all of you will be addressing, how do you, have your delivery teams, the engineering teams participate in different industry forums, right? So what are the solutions that you are building using your products and taking them to the different the industry showcases, the seminars, the workshops, and also what kind of alliances you are building up. Earlier Shaloo spoke about, the hyperscaler partnerships, right? So what kind of, the roadmap that you have for each of your different business lines to partner with these hyperscalers and showcase your solutions? So that is also another thing that you need to have a special focus in your the delivery organization. So these are some of the things I'm available, and I think we are running out of time, so I'll leave some time for the Q&A. We can discuss further, as and when you need. Thank you.
Absolutely. And thank you so much. It's been a great advice that you've been able to share with the participants here. Thank you so much once again for that. And thank you so much for all the speakers, to all the speakers who have taken out time and spoken about their respective fields. I would like to now open up for questions. We're happy to take in any questions that the attendees might have. If you want to direct them to any particular speaker, please let me know, and the question will be asked to them. In the meanwhile, we have received some questions, and Emily, this one is for you. So we want to understand what stage of companies can raise funds through crowdfunding, and is there any stage which is too late for crowdfunding? Additionally to that, what are the costs when you are going for crowdfunding?
Yeah, those are really great questions. And so actually what's really cool is Republic can help you crowdfund at any stage. And a majority of the companies we help, I would say, are pre-seed, seed, Series A, probably about 80-90% of what we do. But lately we've been getting into helping more established companies and companies that already have very large communities, very large customer bases, and they're finding it, as I mentioned, some of those stats, it's a way to tap into their existing customers to create more brand loyalty, awareness. And so we're working with companies at all stage right now in the pipeline. We have some Series C, Series D, even companies. And on costs, I would say, well, actually, just separate from that, we're also getting into helping sports teams provide ownership, helping producers with film financing. So even outside of your traditional fundraising, we're getting into new asset classes. As far as the cost, it really varies depending on whether you're doing a regulation crowd fundraise versus working through a broker dealer. If you're doing a Reg A, which allows you to raise up to 75 million, or a Reg D and Reg S. So it depends how you are fundraising, but there are some upfront costs as it relates to, if your company doesn't have your financials in order in the way that it might need to be, we might have you work with a third-party accountant or third-party legal team. So those could be, a few $1,000s in costs, depending on what you need. And then there's also costs as it relates to, if you plan to market your campaign, we actually have an in-house marketing agency that can help you market your campaign externally, but there's a lot you can do depending on what type of company you are. So we might provide certain recommendations that, we know would actually accelerate the amount you fundraise. And then there's also cost just with Republic. So our fees do vary across the board depending on the company. But traditionally, you can estimate about 5% of funds raised is what Republic takes.
Understood. Got it. Thanks, Emily.
Yeah, of course.
Next question. Yep. And the next question is for you, Mr. Rajiv. So someone wants to understand, how do you really evaluate the VC that, the VC that you're going with? You have multiple offers at some times. So what is the best way? And secondly, in addition to that, what else do VCs bring on the table apart from just capital?
That's an excellent question, Bhavya, and to the person that asked that question. Money is, of course, one thing, but smart money, people talk about smart money. But even more than that, it is really being a guide for you or a coach for you in your journey. Okay, so a coach is not going to play your game for you. They're not your operations people, but they can help you think about things from a vision standpoint, your strategy standpoint, and guide you as long as you're willing to listen to them. So in your fundraise, you are going to be interacting with all the people that you are trying to raise money from. In those conversations, what did you learn about yourself, about your company, that you did not know that these VCs expose you to? For example, we just actually this morning, a check went out, and we had the financials from this gentleman, but he had not put together a proper 5-year plan that with the revenue, ARR, burn rate, and then we started questioning the assumptions underneath it. And at the end of 2 days of a lot of discussion, he said, I had put these assumptions down and I had put my numbers down, but I had not fully realized how the number of salespeople could impact the number of companies that you call and the customer acquisition rate, and therefore the revenue as a result of that. So the modeling, and then of course the capital raise required in the future based on that. So he was actually pretty thrilled that we help him think through things. Now that's just one small example, but your conversations with your VCs will help you determine, are they going to add any value for you? Are they going to bring you insights about your company? And that's who you should be going with.
Got it. Thanks for that response. Next up, we have one question that I believe Joe and Parikshit, you both can take up one after the other. A lot of companies who have capex heavy businesses, and the growth is slower, they have a lot of trouble raising funds initially. So how do you communicate that capex challenge during the fundraise to the investor effectively? What's the process and the psyche behind that? So Joe, maybe you could go first.
Yeah, sure. Well, the first thing I'd say is you probably just have to embrace it. So I think one of the worst things that I see sometimes happen during a fundraise process is a capital intensive company trying to maybe pretend like they're not, or try and reframe it, given a lot of really hard feedback from people who aren't going to invest in those types of companies. And so I do think first thing is you do just have to find the types of investors who want to invest in capital intensive companies and who want to invest in these types of businesses, and make sure you're talking to the right people. If somebody's entire portfolio is SaaS, it's unlikely they're going to get this. It's unlikely they're going to be able to get behind that. And then I think, quite frankly, it all comes down to just like really good understanding of the economics of what you're doing. Frankly, this doesn't change in any for any other business. The payoff has to be large enough, right? And so I think really understanding and having real rational plans about how you're going to deploy that CapEx, what makes this an attractive business, realistic views of timelines of where it's of how long it's gonna take to get to where this is an exciting opportunity, really, really important and really, really useful to be able to convince these types of investors. And just establishing credibility for having the plan and having things de-risked and really being able to understand why this is an attractive investment. I don't think that changes that much, but I would say you just have to make sure you're speaking to the right investors to begin with. I think people sometimes kid themselves, founders sometimes kid themselves on the type of investors who are going to make these investments and then end up remodeling their business unnecessarily.
Got it.
I couldn't agree more. You cannot really pretend that your company is capital light. And honestly, CapEx is one of the biggest moats that incumbents have. There's a reason that, you know, some of the biggest companies in the world have stayed so big, is because they have CapEx. So it can be an asset, not a liability, if you do it well. And there's also a reason that Tesla has built gigafactories. That's CapEx heavy, but you know, that gives them an edge. So wherever you can justify that the revenue to asset ratio is good, and that you can pay back your CapEx within 3 to 5 years at whatever scale it is, right? I think that's something that we encourage our founders to model. And then the other thing, and I alluded to it in my presentation as well, is wherever you can rent CapEx rather than build it and buy it yourself, and can partner with installed infrastructure providers for CapEx, you should do that. And that's again, like Joe said, that there's very specialized set of investors that can help you forge those partnerships and manage that kind of fundraising process. So work with your investors. And one last thing I'll say is, if you do have to bite the bullet and build some CapEx, may it be a pilot plant, you really be open and flexible about dilution expectations. People will only come into your company and take all that risk if they have skin in the game. And many founders, you know, will go on Crunchbase or PitchBook and read industry reports that are more for, you know, a SaaS company, and those dilution expectations have to be different. So that's another thing to take in mind when looking at some CapEx build up front.
Got it. Absolutely. Thank you for that answer, both of you. I believe we have time for one last question, and this is for you, Mike. So I would like to understand, how do you approach the cross-border investments differently from domestic investments? Just a broad overview of that, and how do you really assess the value of that of that investment?
I mean, that is always difficult to invest in countries where, if you're not there. I mean, the beauty is that we are an angel collective then with investors in 30 different countries. So that helps us a lot, since most of the time when we are approached by company, I mean, we're looking at the investors that are based in that country, like, hey, is there something specific that you can share? Next to that, as investors, we really have built a super strong network with other investors throughout, in our case, throughout the whole of Asia Pacific. So in every country where you are, I know some people, right? So for me, it literally is like, hey, I'll just call that VC, or I call that accelerator program that I actually know, and try to get a better perspective. I mean, For me, of course, I want to know a little bit about it, but I think it's fine. I think where I see a bigger issue, though, is, for example, people from the US, if you want to convince them to invest in India. I do feel that very often that is a black box. And that is something that I'm running into as well as Epic Angels, right? Because our investors can be in around the world. Our investments are only in Asia Pacific. So that's where the companies are. They really struggle with understanding Asia. If they've never been to Asia, for example, which still happens a lot, right? They've just never been to Asia. They have no background, like, because there's many Asian Americans. They're really good to get in touch with, by the way. But then, to be honest, maybe find a different investor, right? It's gonna, because startup investing already comes with so many uncertainties that from an investor perspective, why would you add more uncertainties to it? And if you have no connections, if you've never been there, it's gonna be extremely hard, right? So definitely check that out. Have they invested before in Asia, or the individual, do they have a background that's more connected to Asia? I think that is super critical here as well.
Got it. Great point of view on that question. And yeah, excellent. So we will not be unfortunately able to take any more questions as due to the paucity of time. And I humbly apologize to the attendees to whom we couldn't get the questions answered. But I would request you, I'm putting in my email in the chat box. Please do share your queries, and I try to have them answered through the team, through the panelists, and whatever the best solution is, we'll try to help you with that. I'd also like to quickly thank the entire panel for taking out your time, for giving out some excellent advice to the people that are present here, and especially to the attendees who have stayed here for so long. Really understood and heard what the panelists have to say. And as on behalf of D Globalist, I want to thank everyone attending this meeting, the host, the attendees, as well as the panelists. It's been an absolute pleasure. Just a quick overview of the week that is coming in. We'll have the pitches starting from tomorrow itself, and we're super excited to hear more about the companies. And it's been an absolute pleasure for me and the team to get in touch with some of you founders over the past few weeks to understand your businesses, and our curiosity has been just increasing by every conversation that we have had. So, we're all looking forward to the pitches that come ahead, and very excited for the opportunity that exists for all of you. Just to end off by saying that if you have any more questions, any more queries that we could answer, please get in touch. I will just drop in. Yeah, so I have already dropped in my email ID. The Globalist acts as a one-stop solution for all your international expansion needs, and we'd be happy to help as many founders as we can. Thank you so much, everyone. It's been an absolute pleasure.